Hello traders and welcome to another video review. Today is Thursday, February 23rd, 2023. Let's take a look at the Forex calendar for today. There is a bunch of very important data scheduled for release. During the European session, we got the CPI data from the Eurozone and from the period of the January. And the previous reading was 0.5% and the forecast is 0.6%. So the consumer price index in the Eurozone area is expected to grow. Not significantly, nevertheless, if there is any surprise here to the upside or to the downside, it will definitely have some sort of the impact of the on the euro across the board. So please keep an eye on the CPI data release, scheduled for release of course at 11 a.m. Turkish overnight borrowing rate scheduled for release at 12 p.m. And during the New York session, we have the GDP data, we have initial jobless claims and crude oil inventories. As you can see, the GDP for the fourth quarter is expected to stay at the same level of 2.9%, and the initial jobless claims are expected to grow from 194,000 to 200,000 claims. So let's take a look first, of course, at the euro dollar, because there is something going on the CPI. Today there's something going on here. Definitely traders are preparing for this data release, so let's just dig into the charts. For our chart of the euro dollar is showing me some sort of the very interesting pattern. As you can see, if we do this, for example, these two lines here, this one and for example that one, we can clearly see that we might have a wedge pattern on the 4-hour chart. Recently we made a low at the level of 1.06 basically, and this level has not been cleared yet. Nevertheless, it was made almost in the extremely oversold market conditions. So if we take into the account that maybe this is some sort of the wave A to the downside, that is right now about to complete, because we got this wedge pattern to the downside, or as we call it in the Elliott wave theory, ending diagonal. Then of course we might see some sort of the burst to the upside, where basically towards the 50 periods moving average right now is 1.0701, or 100 periods moving average right now is 1.0759. Nevertheless, the burst to the upside will be considered only as a corrective, because if this is wave A to the downside ending with the wedge pattern, then the wave B is needed for the counter reaction, but it's only internal counter reaction, and then of course wave C to the downside is expected as well. So that's the situation on the euro dollar. Please keep an eye on the levels, and please keep an eye on the situation with this potential wedge pattern on the 4-hour chart. So that was the euro dollar. Let's take a look at the do we have any? No, we don't. Let's take a look at the US dollar to the US dollar to the, there you go, versus the Turkish lira. So this is the chart that I'm not analyzing very often. Nevertheless, you can clearly see the situation on the weekly time frame. We have a steady growth of the US dollar against the Turkish lira. Turkish lira is weak, very weak currency. Right now it's approaching the level of 18.88. And despite the fact that there is bearish engulfing pattern on this chart, it doesn't look like this trend wants to stop or pause or reverse. We are trending above 50 weeks moving average, above 100 weeks moving average. The trend is clearly to the upside, and only central bank interventions like here and here are saving the situation temporary, of course, on a US dollar versus the Turkish lira. So today, overnight borrowing rate from the Turkey is expected to be published, so please keep an eye on the situation as well. Maybe there will be another another central bank intervention on the Turkish lira. And of course, data from the US economy. Let's take a look at the 4-hour chart of US dollar to the Japanese yen. What is going on here? So the situation here is quite clear. The US dollar wants to rise way higher. Let me just move this chart a little bit to the downside. There you go. And what is stopping the US dollar is this level, basically this level of 134.83, the previous high from the beginning of the January 2023. So the US dollar is versus the Japanese yen is trading close to the yearly highs 2023. Of course, the recent high, however, was made at 135.23. Nevertheless, there is no close, no sustained close on 4-hour chart above the technical resistance line. So we are still fighting for this. I mean, the bulls are still fighting for the higher levels. They want to break above this level. So right now, let me just draw this line here. We got that situation present. As long as we trade above this trend line, the outlook remains bullish. So after some periods of the pullbacks on consolidation of the recent gains, we should expect another move to the upside. We got this 50 previous moving average, we got this 100 previous moving average. The price is clearly above those levels. Momentum is positive. Upside is waiting for the euro, for the dollar to the yen. And what is going on the gold market? We didn't see this one for quite some time. The gold market, as you can see, is trying not to break below the level of 1,818. So that's the technical support. Let me take a look if there's something on the left. Not really. However, this was the level that used to be a strong technical support. Let me just point it out for you. There you go. So that's the zone that used to be a strong technical support. Nevertheless, it was tested once here on the 4-hour chart, as you can see, but the market bounced strongly to the upside, right? But then again, nothing much happened. The market is still trending below the 50 and 100 periods of moving average, so we should expect some sort of the downside continuation on gold. The resumption of the uptrend might be done only if this level is violated. Let me just show you guys this level here, 1,860. That's the first clue that the bulls are back in town and they are trying to move higher, basically. So as long as we trade below this level, the outlook remains horizontal to bearish, because there's still the RSI is still on the negative territory. Bears are in control of this market, so we should expect another push to the downside to come soon. Of course, if the gold goes down, the US dollar is supposed to go up all across the board. If that correlation is still something important, if that is somewhat important, if that correction is still on and working on markets, then the situation of the US dollar might be even better over the time. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.